A very good morning, ladies and gentlemen. Uh, it's a beautiful Friday morning. I guess from wherever you are, it's equally good. You woke up well, healthy, and ready to learn. Happy to have you again this morning for the continuation of our morning technical analysis class. Yesterday, I wasn't able to make it because of some little bit of commitment, but I'm glad I'm here. We are good to roll on again. And we're going to have a continuation of what we started, and we should be in position to conclude this very part this very part of the class. That next week we begin from another angle. So I'm gonna see how we can make that happen today. So I guess. For the last this making I think the third week, for the last 3 weeks, based on what was discussed or shared with you, right from Coach Mubio, and then what I picked up from, I believe you've been trying to practice. Yeah, I believe you've been trying to practice, and I believe that maybe you're also trying to see the store the more acquainted with, and then it becomes part of you, and yeah, you choose a strategy for yourself and see how you're gonna um, implement that. Now, also, when we're going to in the areas that we're going to look at from next week, you'd equally have to pay very much attention to, so that you pick your areas of interest. Then you see how you can utilize it to improve your trading skills. A little bit of an update in the market. The market is still, it is still down. However, it's showing some positive signs of recovery. And at the moment, BTC is trading at 84. I mean, yeah, it is at 84. And I think, let me just share my screen. Let me just share my screen. So I was saying BTC is trading 84. The BTC dominance is still high. It's still above 50. It's at 61.5. And yeah, we may not say that we are already there in the altcoin season, because for an altcoin season to be effected properly, the Bitcoin dominance has to at least maybe to 50 something, around 50 something, or if even possible below, because that will be the moment where people would be more of like selling or moving their fund, okay, or the profit they realize from the sales of their Bitcoin holdings to the altcoins. And in so doing, of course, we shall be seeing the altcoins beginning to pump one by one, right? But for long as the Bitcoin dominance is still high, only a few altcoins will be pumping, depending on the activities surrounding that particular project within which the crypto has been developed. So it's going to be a one at a time pump for now. But for us to realize the real altcoin season where we see all most of the coins doing pretty so well, we have to reach at that point where the BTC dominancy has a little bit dropped to around 50. And so that is what we look forward to. So at the moment, basing on whatever is happening around the world, like in the US, the different wars ending, and then crypto regulations, like this week, I think, like this week or next week, there's a conference that is gonna be. So all strategies are being laid on how best to create the Bitcoin reserve by the US, which I believe some other countries are already also taking up that. They are developing policies and proposal to also follow the footstep of the US. So they still, amidst all these activities, still surrounded, all surrounding Bitcoin, it keeps its dominance a little bit high, because much of the talk of the day will be more about Bitcoin, 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 Bitcoin. So there will be so much of the former. But when the dominance begins going down and everything has been established, then we shall see something pretty coming up for the altcoins. So amidst that, it keeps us at the position of continuing to learn, continuing to understand the space better, understand the market better, understand some of those fundamentals and sentiments that drives the crypto market. Like, that is what we are left at the moment, so that at least we are not left out. Because what you must know is we are going to experience a similar scenario. All right, it is going to be a repeated cycle. So we have to be very, very positive and open to continue learning. So that said, um, if you this is our Bitcoin dominance chart, the Bitcoin dominance chart, and it is a 1 day Bitcoin dominance chart. You see, it is still really moving up, and let's see what happens. See what happened. 2017, 2018. This was 2021. 2021. You see how far the Bitcoin dominance dropped in the bull cycle of 2021. Yeah, look at this drop. It was around 2021. This 2021 kept on dropping. It went as low as 30 something percent. And that was what made that season to be a crazy season. So we look forward to that as well. The dominance has to drop. Then when you come to Bitcoin itself, we are trading currently at 84. So trading at 84, looking at the monthly chart, okay? I take it that we are in a moment of retracement after this break of structure on this descending channel or this parallel channel in the downtrend. It's a semi-downtrend, right? There was a sort of a downtrend before we saw a break of structure, okay, which was confirmed by that. So, as we always said, that normally when something breaks out, okay, there has to be a possibility, or there, what must follow next is actually a retest. The price has to pull back to the area that it broke out from, Yeah, it can come exactly within the same area, or it may come slightly near that area uh, before having a continuation of that trend which it started establishing by the breakout. So that means if you monitor this, if you look at this movement, realize that it is in a moment of retracement still. If you look at a 1 month time frame, and in the 1 week time frame, it's pretty showing a good sign because yeah, the retracement was eminent within this region. Yeah, this was our resistance, which was broken at that point. So there is a retracement, which I should conclude that there is an aspect of see this part. There's an aspect of support, and what is building up is a bullish momentum. So I should say it's a good sign. Yeah, it's a good sign. Probably by this weekend or next week starting, we should be in position to see something positive. So this was the region. This was the area, right? This was the point. You can see that. So it's a good thing. So let's be hopeful as well. The market will do well. Okay. So that aside, let's come back. Baby. Oh. All right, sorry about that. So let's come back. Let's come back. We are speaking in chat. So now today, the other time we looked at a downtrend an uptrend market, and how we can go about identifying trade entry opportunities in them and then trading them. How you can go ahead establish those different margin call drops. We looked at a sideways market and the different opportunity it presents. Now, today I want to conclude on how you can trade in a downtrend if your intention is to do so. Now, this is basically for two reasons. One, there are things actually that most leaders in the community has encouraged, that if the market price is in the course of a downtrend, or when the market price is dipping, or when the market is dipping, you are supposed to continue buying the dip, right? You are supposed to open more margin calls, right, to allow the robot continue buying the dip. Now, it is a scenario that most people, normally what is advised by some leaders is that just increase your margin call limit, and then the percentage increase sometimes is not told to you, or if they do, they give it bluntly. They just give a range. They say open up to about 10% margin call drop, right? So, or you open a margin call limit that would cater for about 10% margin call drop. Now, at the different price drop, right, the different percentage drop at which you would wish the robot to be executing those buy position, right, accordingly, sometimes becomes hard. You may not know. So you will be left at a point of assumption. You just create, you just divide. You get that? If it is 10, you may say, I'm going to open extra 5. I'll give each call drop 2%. Or I will open 3 and then I divide the 10 by 3, right? If it is you want to open a margin call drop that get us for about 10%, you just put 10 divided by 3, whatever percentage you get. you set it there as your margin call drop. Now, you could equally do it this other way that I'm going to show you. Instead of sometime bluntly opening up this margin call or using assumptions, if you realize the market price is in a downtrend, right? What you would probably do is you monitor that trend through the establishments of these trend lines, right? Putting at the back of your mind or identifying some of those key price reactions level, such that when you're going to establish the margin call drop, you have specific measurements of what you're going to set for the respective call drops. Okay? So that you know you don't just open, right? Because you are told to do so. Okay? You will open those margin call drops at a time, because you don't just open margin call drops, you have to open them at a time. I am speaking to those sports traders who like using the one-shot strategy. Leave along the cycle, leave along the busy people. But we're talking about those who would wish to take trades on one shot and get out, right? If you're a cycle trader, it is okay. You can open for as many as you can. It is very okay. Okay? Yeah, so that is the people I'm going to talk to this morning. Now, let's assume you came across a falling market like this. This is a falling market. Okay? So, the market price is already in the course of a downtrend. You're not very sure whether the price, because by looking at this candle, you're not very sure whether the trend has reversed. And so is this other one. Okay? On looking at this, to you, you may think that the price has already reversed. And yet, this could be a retracement to maintain the previous trend, which is a downtrend. And same applies to this. This may appear like a market price rise, but at the same time, it could act as a retracement before we could see another movement, breaking structure somewhere here to move down, and then later on have that kind of movement again, and then break structure and continuously move down. So you can't tell as well, but you can be trading this market, because this movement we see here is quite a movement. It's quite a big percentage that you could take advantage of, and same applies to this movement. It is a retracement in the course of a downtrend, but it's quite a remarkable movement that could earn you something. So as a trader, you would want to identify such opportunities in the course of a downtrend so that you can make entry and take off some profit, even as the market price is going to go down. So when you're going to do that, to monitor this downtrend, you follow the same thing that I shared with you. One, we first of all say a downtrend market is characterized by lower highs and then lower lows, right? So it is up to you to identify, you identify and mark your lower high, because when you're drawing a trend line in a downtrend, you could equally do it in two ways, either as a single line or you can use double line. If you're going to use it as a single line, right, you will have to draw that line connecting the identified lower highs. Okay? Just identify the lower highs, mark them, and connect your trend line, and then extend it downward. That is extending it to the future, because your interest there would be to identify two things. One, a possibility of a breakout. That is what you are after. A breakout above this trend line is what is going to give you a conclusion of a trend reversal, or a picture of as to whether the trend has reversed, or there's a shift in structure towards the uptrend or not. For as long as the market price still maintains its trading below this line that you have drawn, you would still conclude that the trend is still continuing down. Okay, so your real interest in drawing this trend line is to identify a possibility of a breakout. You're looking for a breakout. And what will be that breakout? a break of structure where the market price or the candle opens from below the line and closes above it, and then a confirmation candle forms there, and then you have that movement, such that the market price, I mean the coin should be trading above that line. That is what you're looking out for, right? So what we're going to do here is the same thing. So we identify our lower highs, and then we connect our trend lines. So in this case, this is our higher high or a swing high. It is a real point of trend reversal to the downside, right? So when we want to draw this, you could equally pick this as the starting point of your drawing, because you can't take up this because it is still work in progress. So pick that as the key point and then connect it to any lower high you've identified. So in this case, I have that, and I'm going to connect this. So this becomes a swing high, and this is my first lower high. So what I'm going to do, I'll pick my trend line, put it there, and then connect it to this trend line. So do we see that? Like that. Okay. So we see that. So we have drawn our trend line to monitor this downtrend. Now, what we're looking out for is a scenario that may be like this, like what is forming. A green candle for that matter, will have to open from below this trend line and close above it. Then the next candle that should open, it has to open above this line and still close above that line. Should it close below it, it means that is already a fake breakout, right? That means it is a fake breakout. For a true breakout to be ascertained, in an uptrend, that means, for a true breakout to be ascertained in the course of a downtrend, if you've drawn a trend line like I have done, that candle has to be a green candle, which should open below the line and close above that line. So once it does so, and the next trading session should begin where the candle will open above that line and then close above that line. Then for you make entry in the third candle. So you'll have this candle, the confirmation candle, then you enter from the next. That is for a patient trader. That is if you want to trade basing on the breakout structure, okay? So that's what you would do. But for as long as the trade, if we had drawn this line and then you find that the candle is still below, that means we will not conclude that a breakout structure is happening. So for us to ascertain or confirm this breakout structure, we have to wait, okay? And this is a 1-day time frame, which probably that means we'll have to wait one more day. You get that? So it depends on the time frame in which you're drawing this. What we're seeing here as a breakout structure, if you go to a lower time frame, probably it is something that already broke structure and it is already trading above that line. So the other aspect of the confirmation now, we shall still find that for us, it is already trading actually above that, and there are good opportunities that could be taken from those movements. Okay. So that's what you do. So if you want to use a parallel channel, connect that like I've done, like that, and then you connect it to a lower low, like that. So here, literally, we have only one lower low. We have only one lower low. However, just like we said that the parallel channel helps in capturing about 3 key price reaction level in the course of any movement. Like in this case, it is a downward movement, so it has captured 3 key price reaction levels. The first one being the upper line, then the lower line, and then the middle line also. So because it captures the middle line as well, if you look at this movement, you will also appreciate that in one way or another, price has also been reacting to this level or that dotted line, right? Yeah, so when you want to make entry, you make entries under 2 occasions. One, You can wait for when the market price drops to this, okay? Because in this case here, that middle line is acting as a support because the candles were, were all above it, right? It was trading above it. And then another support is this lower one. This is a resistance, right? So if you want to make entry, you wait for those moments where the market price has dropped to your support level, either this one or this one. Once it does so, that is where you make entry. You take your profit to this middle line. If you entered from here, you measure, take profit to the middle line. If you entered from this, take profit to the upper line. Okay? Right? So that's how you do. That's how you do. So you can, so for example, if we had come, like in this case, now, mark you, if you recall what I told you the other time, that at every point where the market price touches on the trend line, irrespective of the direction in which you've drawn the trend line, that point as well act as a price reaction level horizontally. So meaning you could equally draw a horizontal trend line to capture those spots where the candle touched on your channel. Through that, it will help you establish one, the margin call drop, and two, measure your TP percentages. So in this case, remember we're in the one day time frame. So meaning this can be a price reaction level. This is another price reaction level. We're just going to establish that, though it would have put it here because of the multiple touches by this candle. Okay, and we also just put one here. This is another. And then we also have another there. We are basing on the candle higher and the candle lows. We'd have that. Now, if we have captured that, if we have captured this like this, that every other point where it is touching on the line, we draw a trend line. Any other area below it where the candle has not yet reached, we are going to based on whatever price reaction level that was recorded previously, right? Previously. Like in this case, since we don't have any other price reaction level below, we're going to go back and based on the records registered the other side to also draw a line and see if at all this price was supposed to drop, where is it most likely going to be halted or is going to encounter a block. So we just go a little bit. This would be a key one. We would draw that. Okay. So meaning the next movement, see the candlestick dropping to this level. If at all it fails to break out, yeah, we're most likely going to see it coming back to that level. And then the next one could be this. Yes. Okay. See that? Would have something like that. So the price is reacting on the trend line. Okay. But at the same time also, now measuring this will enable you get this difference. Sorry. Will enable you get these differences. Right? And then if you're a current price trader like myself, if you decide to enter there, that means your TP would be around there. But no, I see also here a price reaction level. Let me put this one here also. There's somewhere here where the price reacted. There. So if you're a current price trader, if you don't want to wait for when this candle will close, you would simply enter from this current price. This will be your TP. And then your first drop would be when the price drops to this first level. All right. This price breaks this first level. Okay. And then the second will only happen when the price drops from that point to this level. Now, this is a higher time frame. Remember, the percentage may seem big, but if you want those mini movements, you go to the lower time frame. As we always say, you go to a lower time frame to capture those mini movement between the two critical price reaction level, that higher time frame. Okay, then possibly the next would be from that to that. That is a crazy movement, right? It will be after a serious market dump. So if that is true, that is how we would go about establishing your margin what? Your margin call drop. Now, if all right. So I hope first of all, like, before we continue, I hope that is making sense. Yeah. How you measure and then capture those price reaction level. I hope it's making sense to you guys. Mm? Mm? Okay, that's good then. It's making sense. So literally, the tool we're using these are drawing tools. I remember, okay, somebody asked the other time that they would want to know how we get those drawing tools. Yeah, those drawing tools are actually the tools you find here. You find them here. Let me pick something. Where's my drawing? Okay, let me share my screen. Let me show you. Okay, that. Find it here. This is where all the drawing tools are. Where this pencil is. When you tap on this pencil on your trading view, it will take you to a list of drawing tools. Of course, these drawing tools are categorized, right? Depending on what they do or what they'll be used for. Especially the measurements, you'll find them. If anything to do with the trend line, anything to do with the trend lines, you'll find it here, right? Under trend lines. So here you'll have a number of drawing tools. Now, what you're going to use, the one you feel you may most likely use, you put it under your favorite, okay? You customize it among your favorite drawing tools, okay? Yeah, so you just customize it there, okay? Then we have others under the Gann and Fibonacci. This is where we find the Fibonacci drawing tools, yeah? Like this one here. We also find the Fib channel. These are basically all applicable drawing tools that you can use depending on which one you find yourself comfortable in using. Then under the patterns, this tool here have been majorly used for capturing the chart patterns, yeah? I believe we have some of these patterns that can be captured by the indicators. But beside the indicators, these ones here are the manual tool. Instead of using an indicator, you can decide to use, you can decide to draw them manually. And in that case, for you, you'll be capturing your areas of interest. With the with the indicator, it sometimes gives a general, it captures general. So for you, if you want to narrow your areas of concentration, you can decide to use this other drawing tools. Like for example, if you want to capture the A, B, C, D, or the Elliott triangle wave, the Elliott wave, you know, the Elliott wave is also an indicator, but then you can also have its tool, right? We have a number of them here. And like the ABCD pattern, that is normally registered in when you're using the ABCD indicator, you can equally use the drawing tool here. So you find them here. This is where you just find them. You can explore. Then anything to do with measurements, you want to measure the percentage drop, you want to measure percentage drop, you want to measure any other thing, you'll find them under forecasting and measurement, right? Like the price range we use is this one. When you use this one, it will measure the percentage, but at the same time, it will also estimate for you the duration in which that particular percentage will be attained under normal market condition, right? It gives you the range of time, which most likely that percentage will be attained. All right. Sometimes it doesn't really reach, depending on the momentum of the market, but it estimates for you. So it gives you the date. That's why it is called the date range. I mean, this one here, the date and price range, right? This one specifically gives you the date range. So depending on whatever you want to use, you can explore these tools and try to use them. It is okay. It is for free. You can explore for free and use for free. Then you see what comes out when you're using them, yeah? Yeah, so that is that. I think I have a problem with I have a challenge with my, I have a problem with my, wow, serious. Okay, let me first exit, then I rejoin. The annotation is failing to disappear, and it is failing to to come back. Okay, let me just do this. Wow.
Coach Musa, just press your button to switch off your phone. Just press it, then it will stop sharing. Then you'll be able to come back again.
Okay, so that is technology. I don't know what happened, but that is it. So I think I hope the picture was very clear. The picture I've painted is very clear. I wanted to do one more demonstration but while looking at a more smaller time frame, and that that maybe that. Okay. All right. So let me share my screen. This technology sometimes disturbs. So I want to specifically pick any coin that is in the course of a downtrend. That's what and then I try to see how we could do that practically. Fortunately, most coins are just they're just moving down, 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 down. Let me see on. Can we use this? Hmm. Can I use this? Okay. Let me try to use this. There this. Let me use Solana. Okay. Permit me use Solana. Mm, okay. Let me use this. Let me just capture this. I'm gonna use this Solana. So I'll capture one. Let's see what can do. Okay. See, if I am to use this, let me use this to okay. I'm going to monitor. We're going to monitor this trend, right? It's a downtrend movement by Solana, and we're using the 1 hour time frame. Okay, and so here we have this. Okay, so I'm gonna have this area. Then I have this one, but then there is also this. Let me use this. Okay, and then I'm going to capture anything below that, which in this case would be, let me do this first. Okay, you'll have this, and we have that. Then lastly, we have that for now. Hmm? So we have that area, the area above. This is where the market price is. So let's see. If we are to use a preset, to use a preset. Okay, this is not clear, not very nice, but let's see. I wanted to capture an area where, but okay, let's base on what is already there. Let's base on what is already there. So there's likelihood that, but so we have this here. This is also an area where it almost touched. By our drawing of this should be an area where it touched. Okay. So we are going to use this as our preset. This is be the area of preset. This would be the area of preset. This. If nothing changes, we expect the price to come to dip to this level, right? Before it can actually come back to this trend line or the descending channel, or it could even dip below to this other level. So what we want to be certain of is we want to capture if at all there's any movement, any mini movement within the course of what we are trying to see. So in this case, if you lower our time frame, so that means we can see that the price is going to is most likely going to dip back to this level before retracing. It's a possibility, right? Remember, these are possibilities. Okay, it may be like that, which if that happens, then that means our preset would be at this. We'll capture this area, we'll put our preset price around here at 126.98. So we wait for the price to drop to 126. When the robot buys, then in the course of any slight movement, in that matter, which in this case, what that would be around, if we enter exactly at that point, that means we shall have to go back to that resistance. That's a small movement. That is 1 hour time frame. I mean, 15 minutes time frame. That would be a small movement. But at the same time, if we let me use this. I think this is better. Taking consideration of this reaction level is what I'm going to take consideration of. The other one was a very mini movement. So if I want to use a preset, I think I'll drop my preset at 126.57. So meaning if that is the point I would want the robot to buy, if the market price rises back to this level, that will be around one something percent. Okay, 1 something percent. Remember, when we are making these settings, we are actually not very sure as to whether the market price will dip back to that point or it will come to an area closer to the point before reversing. So we use an estimation. That's why sometimes we say, instead of if you identify a particular price reaction level and you would love to set it as a preset, try to take off some percentage. Take it somewhere slightly above the very same price reaction level. Because there's sometimes it does not really come and touch on that specific point again, but it may come close to touching. So you'll have to establish something near the very specific area. Like in this case, if you wanted to set a preset at 126.57. You could take it off a little bit at 0.5, 0.2, 0.30, up to around there. You can take off something, and meaning the exact entry price as your preset would be around 126.96. Okay, that is for the preset traders. But otherwise, for me, I love current price. I always don't want to miss out, because sometimes when that doesn't really touch, that means you miss out. So you have to go for another coin, right? Yeah. So that's what happens normally. Right? That's what happens normally. So in this case, we are seeing a build-up of the market price, which is not very clear, because the market price here is more of like consolidating. If you can see, it is not very clear. It's more of consolidating. It has been more of consolidating. So anything can happen in this case. It may break above here. It may go around here. It may just move and break about this region. Then we see that movement. Or on dipping below, we may even see it after dipping to this point, may break below. If you recall what the price delivery algorithm, the different phases of price delivery. So anything can happen, because here in the 15 minutes time frame, it is consolidating, right? It's more of consolidating, a consolidating market. It's more of a consolidating market, just like we saw here also. Here it was more of consolidation before the price broke below. Say that. It's consolidating before the price broke below. So sometimes you can't tell. You can't tell. But literally, the only idea of making entry in any market price, in any course of a downtrend, is identifying a support level. That's where you set your preset, or you enter from and then take profit to the resistance. Baby, no. Hmm? So I believe that is okay for now. If that is okay, let's end here for today. But next week, we shall see how we can combine, how we can incorporate maybe some indicators to support our analysis, just to give us a clear picture as to which direction the market price is most likely going to go, or as to whether there's an increase in volume, which will give us confidence in entering the market or not. So we're going to see a combination we're going to see a combination of parameters now to increase our confidence. Here, what we're doing is literally more of price action. We are just basing on what is happening in real time, right? To analyze the market. But now the indicator is going to support our analysis. It's going to now help us see in terms of volume, momentum, and then the direction, right? Now it will give us the confidence. So in this consolidating market, which we just saw, we may sometimes fail to make decisions, right? But adding in some other ingredients, the indicators or some supporting tool, helps us in actually making up our decisions. Okay. Yeah. So that's what we're going to see now, how we can add that onto the trend lines to give us a clear understanding and picture of what is most likely going to happen in the market. So, ladies and gentlemen, this for today would end here. Unless there's a question, there's something that you feel I could just touch slightly, something that really does not require so much of an explanation, then you could drop it on. But if it is not, then we could end there. So I'll be here for about 1 or 2 minutes to see if at all there is anything that I may have to attend to before I can hand you over to the house of the day. I mean, to Coach Mopua, if at all there's something he would like to add. How do I delete an indicator from a trading view? No, I think this depends on the font type you're using. For 100 users, let me just show you quickly how you delete an indicator. If you add an indicator already on the chart, let's say, first of all, the interface of an Android phone has been changed in a way. So for those using an Android phone, most likely this is what you see here below. You have a pencil and something like this. So it is this part that you touch. When you touch on it, you come to this, you'll have indicators, you'll have object tree, right? And these are the different features. Now, if you want to add an indicator, you come here. If you want to remove an indicator, you come to the object tree. For example, let me add one indicator like stock. So I've added that indicator, okay? When you say you're going to, when you just tap on it, it will take you to the settings. It does not delete, though previously before the updates, if you touched on it, it actually immediately gave you a provision for deleting, yeah? But nowadays, it just takes you to the settings. So if you want to remove it, you come back to this very part, come back here, and then you go to object tree here. Then you tap on it. Then now you look out for that indicator which you want to delete. In this case, it is this stochastic RSI. So it gives you a provision for hiding out. If you see that I, you can tap on it, and once it crosses, it means you've just hidden it, but it is not out of the chart. But if you want to delete it, then you just tap on the next icon on it, right? So you can decide to hide it. When you go back, it is hidden. But when you go back there to the object tree, you find it is still there. So to delete it, tap on that part. This other part. Okay, that extreme part. That dustbin picture or icon. And then boom, it will move. So when you check, it's normal. But for those using Android phones, I think you just once you tap on that indicator, it gives you that provision for deleting. So you just delete it. That's how I do it. Okay. That's how I do it. Okay. So any other thing, please? Coach Mopiwa, please hand over to you. If at all there's anything you would like to say before we can conclude. I'd also go and do other things now.
On my side, Coach Musa, just a thank you for taking us through this first week. Yeah, I think those that have been attending, something is adding up. They are able to understand where we are going with this. So thank you so much, Coach Musa, for availing yourself and your support that you're giving to crypto ambassadors. So I don't have anything to add, just only to thank you for taking your time. Yeah, thank you so much, everyone, for attending.
You're welcome. Have a blessed day, guys. Have a blessed day, and see you on Monday. Bye. For those,
right. Thank you
for
so
those
much.
the Muslim brothers and sisters, Juma Mubarak, please go and pray. Go for Friday prayer. Go for Friday prayer. Go and pray. Go and pray for more strength and knowledge. Yeah, to understand better. For those not understanding. Okay. See you guys next week. Have a blessed morning.
All right. So we are meeting in the next Zoom. See you guys. Thank you so much. Have a lovely day. Bye-bye.